Live from London, I'm Mark Barton.
And from New York, I'm Vonnie Quinn, and this is Bloomberg Markets. Time now for Futures in Focus. The dollar is modestly higher today, holding on to some gains versus many G10 peers. Traders already eyeing the Fed potential rate decision this week, while oil slips below $50 per barrel as Gulf refiners restart after Harvey. Joining us from the CME to discuss all of this is Tim Evans, Chief Strategist at Longleaf Trading. Tim, traders are obviously eyeing Wednesday's FOMC statement and everything that comes with it, but do you imagine there'll be movement off the back of it?
Well, I mean, there's not any meaningful economic reports out today, so it's going to be pretty quiet, and I'd imagine the lead-up will be pretty quiet. But yeah, I mean, I think ultimately, depending on the language spoken in that meeting, could have a decent impact on the market. I mean, if you've noticed the probability that we're going to see a December rate hike, that's declined here over the last weeks. And I think if Fed officials in this statement indicate that there is some confidence going into the December meeting that we're going to see a rate hike, I think the dollar actually could catch a decent bid here to end this week.
And then what about oil, Tim? We saw it above $50 a barrel once again for a good portion of time there at the end of last week. This week it's starting off a little weaker. What are traders saying?
Well, I mean, we kind of have, the recent effects of the hurricanes, which were obviously very bearish. But I think the intermediate term fundamentals that the market was trying to balance were actually pretty bullish. The bearish short-term fundamentals, which was the hurricane, 15 of the 20 refineries that went offline are back at full or very near full production. So that situation's kind of cleansing itself. And I'd imagine we're going to see record exports from U.S. energy companies here over the next month to allow that market to find proper balance. But, one thing that's kind of lost in all this hurricane news, the Baker Hughes rig count data again. Friday, another pull or a drawdown in the number of rigs. 7 were reduced, and that makes the reduction 6 out of the last 8 weeks. So I think that's a substantial development and is showing that we could be at a very kind of point of equilibrium with respect to price in the oil market right now.
Okay, Tim Evans, thanks for all of that. Tim Evans is Chief Strategist at Longleaf Trading Group. That was today's Futures in Focus.